All the metals took a pretty big hit today. We're going to go through those and why the metals went down. So let's explore. We saw a dramatic rise. In fact, silver went up over 5% the other day, a couple days ago, but now we're seeing some retracement back in the other direction. This is not a correction, folks. This is a move to the downside because of some data that came out from the Commerce Department. We're going to talk about that, but it still is up from where it was before based off of these data. But let's take a look at where the metals are right now. Gold, this little metal that you see before you here, this bright yellowish metal, it is down 1.27% as I record this video, down 23 bucks, below $1,800 again, but still in the high 17s. In fact, it's at $1,792.60 as I record this video. Silver is down over 1.7%. It's 1.77%. It's not reacting as dramatically. In other words, it's down sharper than gold, but not down as much. It has lost 43 cents today, bringing it well below the $24 level to $23.62. The other metals were not immune from this action today, and we saw platinum fall over 1.9%, down $19, now down below $1,000. To me, I think anything below $1,000 for platinum is a bargain in my view. Palladium is also down $14 a day, 0.87% to $1,747. It is now consistently lower than gold now, even in the ask price. The bid price for palladium is $1,597. So there it is. And rhodium actually took a hit today too, down 50 bucks to $12,750. So there is the recap of the markets as we are literally about minutes before the close of the markets today. And we are looking at what is driving this. Well, economic data released by the Commerce Department today showed the final reading of the gross domestic product, which is the broadest measure of the U.S. economy, grew at a pace of 3.2% between July and September due to strong consumer spending. This sounds like good news, and I would applaud good news no matter who is in charge, no matter what policies are being implemented, because I feel that, you know, if the American people are doing good, then it doesn't matter what my agenda is. I never hope for bad news no matter what. But I think there's an explanation we can make for some of this that is occurring. This was above the 2.9% estimate from a month ago. And so it's getting better, at least the gross domestic product is. But I'd love to see a breakdown of what that is. Now, here's why I don't think it's as good as news as some people think. Well, we are in the midst of inflation, and inflation keeps on growing. Now, in spite of it growing less, now it's 7.1% or thereabouts. That is on top of the already 7% that we saw last year at this time. So if you go back 2 years, we're at well over double-digit inflation, 14% over the past 2 years. That's a lot, folks. And it grew at 0.1% month over month. So we are still in a world of hurt in terms of inflation. And so my feeling is that a lot of what is being bought, people are saying we better buy it now because next month at this time or in the next couple of months, these products are going to be more expensive. Inflation is driving a lot of this, folks. I think a lot of this spending. And, of course, which couples upon more inflation, and it kind of rolls over and feeds upon itself. This is why you have things like shrinkflation. This is why the fear of stagflation could very well come into play before long if we're not careful. And so those are the things that we're eyeing and looking at to see exactly what is causing this and for how long it will be sustained. For gold and silver, they're going to be hurt by this through this time period, which means that they are at a bargain, I think, during periods like this. We saw gold, well, it started to tumble at the release of the data as the ICE US dollar index was up 0.23%. And as you know, that is really the thing that moves is the dollar. And that's going to be having a direct effect on gold and silver prices. And we know that that's a gauge of the dollar strength against the basket of other currencies. And we also saw the yield on the policy-sensitive 2-year Treasury edged higher to 4.244% from 4.213%. That also weighs down on gold and silver. The risk of more Fed rate hikes remain on the table, as it seems the U.S. economy was a little stronger in the third quarter, and as the labor market remains very tight, wrote Edward Moya, senior market analyst at Oanda. Gold's rally was already running on fumes, so this sell-off today kick-started on a profit-taking. Momentum took care of the rest. But again, folks, I think that this is just a little hiccup, and I'm actually bullish for gold heading into 2023. You'll find out soon enough about what my predictions are coming up in another video. But regardless of what I think, it's what the market actually does with regard to the precious metals. And you should understand that it is going to be volatile. There's going to be a lot of leeway. There's going to be a lot of movement, I think, heading into 2023 and into that year dramatically. So this we're going to continue here as we look at the other indicators here. And as we look at this article from MarketWatch, stock market extended losses on Thursday, erasing their gains from the rally in the previous session. So we're seeing, again, one of those things where the markets are moving in tandem with the metals. You don't see that too often, but we've been seeing it more and more as of late. Usually it's the other way around. But so there's where your market is today. This is why gold and silver fell, not as a correction. I think that's one thing to note here, folks, which should give us some positive momentum heading into 2023. In other words, the prices dropped a couple of days ago. We saw a little bit of a correction yesterday after the markets went up based off of what happened in Japan. And you heard me talk about that in a previous video as to why gold and especially silver climbed so dramatically. We've not seen the massive pullback from that. We saw a reaction to today's news with the unexpectedly good report from the Commerce Department, gross domestic product. Probably the last one we're going to get of the year. So, but sooner or later, that's going to wear off because I think and maybe they'll come to analyze that number and see, well, it probably is a lot of people buying, not only based off of fear of inflation, so the products they buy are going to be more expensive, but also we have to keep in mind it's Christmas time, folks. And so, of course, there's got a lot more people buying Christmas presents and the like. So that's why we see positive GDP numbers. And so, to me, that's not that much of a surprise, even though they say some of the activity has been less than what they had hoped for. But still, the number came in higher than expected. I think it's a combination of those things. And we'll probably likely see not so encouraging numbers coming into the first quarter of 2023. And we also have winter and cold and heating oil and all that. Those costs will be continuing to rise. And I think because of what's going on in Ukraine and Russia and also just overall inflationary spending here and this omnibus package that is likely to pass, this 4,500-page, $1.7 trillion bill going to be coming into the Congress and be passed, and which is going to be a lot of wasteful spending. And that is going to further dilute the monetary supply and just do more to cause inflation to increase even more than what it has now. And so it's really frustrating to see that Congress cares not about you, really, even though they may say they do, but they don't care as long as they get their pet projects done. And that's really a shame that it has come to this. And but that's where we are at. But you know what? I think I'd rather have a pet rock than some of these pet projects. And certainly my pets are gold and silver. I think accumulating those is the best way to protect ourselves from economic instability, and that we seem to find ourselves in these days, even if some of these numbers may be, even to a point where they're being out of whack. But again, I hope it's good news. Like I said, I hope for positive economic conditions. And I'd rather have low gold and silver prices and the economy do well and people do well across all spectrums, even if it goes against my ideology, because I believe in people, and I believe in people being, and I want people to be successful, no matter who's in charge and no matter what's going on in the world today. So let me know what your thoughts are in the comment section below. I'd like to extend a multitude of gratitude to all of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.